What's going on, everybody? Chef here. Welcome back to the channel. All right, APE has been listed on the New York Stock Exchange. A little bit of volatility at the open today, hitting a high of 1050. We still have about 30 minutes left to market open, and it's sitting just over $5. There's a lot I want to go over in this video, more specifically on what is likely to happen in the short term and the effect of APE. I want to give you my opinion on it and also just my experience dealing with similar situations. Obviously, okay, the preferred equity dividend is completely unique, but understanding the motive behind the AMC board of directors is very important. So I'm going to break everything down for you guys. Let's get right into it. First off, take a look at AMC today. It's about to bounce off that $10 level. Now, there was already a lot of people jumping on, not only on Twitter, okay, even a couple of YouTube videos saying, listen, the reason why AMC is down 40% at open this morning is because Cineworld's bankruptcy, even though they've been talking about this for a few days. And the fact that AMC is, continuing to struggle. They're seeing a little bit of slowdown in quarter three. They need to raise capital. And if bankruptcy is, in Cineworld's, future, it might be there for AMC as well. And that's why it's down 40%. However, Adam Aaron had been pounding the table for the past few weeks, and even this morning saying, listen, that remember the APE already having its first New York Stock Exchange trade today. The value of your holdings consists of your AMC and your APE value combined. And when APE had opened, I think it opened on, if you look at TD, it was about that 730. All right, when you looked at where AMC was, it was about close to that 1802, hitting a high of somewhere around that $22 combined range. Now it's sitting somewhere around $16, which was likely to happen. I'd stated in previous videos that says, listen, even though this is completely unique, you have to understand how event cycles occur. All right, and there is a buy the rumor, sell the news. There is a run up into these, okay, and then a sell off after. And we watch the same thing happen with GameStop split. All right, so do not let that be concerned. However, I want to talk more specifically about APE, as it didn't get into my brokerage until a little bit after, probably about 2 hours after the open. I trade on TD Ameritrade, and I do have a Webull account. However, my long term and my AMC is held in Merrill Lynch, and they're just always really slow. I actually tried to even buy more AMC when it was around that $11 price point, and it wouldn't let me do that. Like I said, that was earlier this morning. But let's talk specifically about APE, okay? And I want to give you my breakdown because it's going to be very important for the short term, okay? So first of all, APE is a very unique situation. I've said this before. AMC needs to have the ability to raise capital. And in order to raise capital, what companies will do is an offering if they have shares available to sell to the open market. Now, that doesn't include what's in their float. So, for example, AMC's float used to be 100 million, and they had the availability to drop over 400 million shares, sell them to the market, which a lot of times will get sold at a discount to institutions, but they have the ability to sell them directly to the market in order to raise capital, which is what they did. They continued to do that in 2020 and 2021, and that's how they were able to get money to not only pay down some of their debt, but just to pay some of their bills because they had no income. However, they don't have that availability, right? And if you remember in 2021 last year, Adam Aaron and the only way to get, I'm sorry guys, the only way to get that availability is to get approval from the shareholders, which Adam Aaron last year had tried to do at the end of quarter two. And he even went on live with Trey and said, listen, if you do approve this, we won't drop any shares until 2022. And this was back in June of last year. So they don't have that availability because the shareholders, which is mostly retail, had denied that. We didn't approve that. And that's where this APE comes in, okay? And right now, APE, if the APE units are 500, let's say 516 or to 518 billion or million shares, and that's because you have one APE unit for every one AMC share. However, you can see this right here. AMC said it is currently authorized to issue up to 1 billion APE units, and that it's distributed a little more than half of the total. So they still have just under half a billion APE units to be able to drop on the open market. There was a total of 5 billion from what was stated earlier in form filings, okay? So they do have the ability to be able to drop these shares. That is their goal, okay? Their goal is to issue more APE shares, sell them to the open market, okay, in order to raise capital to pay down some of their debt. You could see it right here written in this article. Even if you look on, on the statement, the earnings statement written on the 4th, Adam Aron even says, listen, the new AMC preferred equity gives AMC a currency that can be used in the future to strengthen our balance sheet, paying down debt, raising fresh capital. They do that by dropping what's called an offering. All right. And if you're unfamiliar with offerings, let me just break it down for you. What will happen is if APE is currently trading at, let's say, $5 for round number, they will try to get a single or a multiple allotment, all right, by multiple institutions. Say, listen, right now APE is trading at $5. And listen, I got 100 million shares I want to sell. Would you take these for $4 at a discount? And therefore, these institutions, okay, or allotment of institutions will take these and say, listen, yeah, that's great. I could get them at $4 and I'll be able to immediately unload them and make it an automatic profit. Now, this all has to happen very quickly because the second Bloomberg terminals start picking up that there's an offering, algorithms immediately kick in. And that's why these stocks drop. They drop hard and they drop fast. Okay. And these big institutions, they're looking to make a quick profit and they're not looking to make that full 20%. All right. You got to think this is a massive amount of money here. They're not looking to make that full 20%. If they can get 5%, 6%, hey, even 3-4%, no problem. And therefore, AMC will then be able to collect that $4 times 100 million. And this is just an example, that $400 million, of cash and do as they please with this. That is their goal. So in the short term, okay, will APE be most likely diluted unless it gets picked up heavily? Absolutely. The problem with APE getting picked up, heavily right now is there's nothing backing APE. Okay. And when you have nothing backing APE is the valuation comes from a piece of AMC, which is why you see AMC trading down 42% today, because that valuation has to come from somewhere. You can't just create things out of thin air. Okay. And that's a big psychological approach. So in the short term, will APE get diluted? Most likely. Now, here's where things get to be a little bit different. All right. And I couldn't find out any of this information on any of the filings. And if you do have any more information, please let me know. But I did look this up. Listen, how long does a company have to wait to do an offering after an IPO? And if you could read this, I misspelled multiple different things. But a lot of times there is a lockup period. And you'll see this right here as it's stated, with insiders, okay, board of directors. If you remember the SPAC era back in 2020, all right, there was a lockup, which was known as a PIPE, all right, which these big investors, okay, that had started these SPACs, listen, they're not allowed to just dump these shares in order for a so long period of time. However, this can be a little bit different. So when you're trying to time, listen, when is the potential for this to happen? Well, I wouldn't think that Adam Aron would want to literally, open it up today, and then tomorrow all of a sudden he's dropping, 100 million shares, though potentially it could happen. However, there could be a little bit of a lockup period. Now, this article states that the availability to be able to drop a total of $1 billion, which means there's just a little under $500 million left to be dropped. However, there's a total of $5 billion, okay, that are complete or are in the availability to once be done for an offering. There's just that time frame that comes into question. Okay, so for the near term and the short term, would APE most likely get diluted? Well, yes. Okay, is that going to affect AMC? Well, we've talked about this. It runs off a same valuation. Okay, and if not valuation, there's sentiment and correlation. Okay, which is why a lot of times when you see GameStop run or GameStop pull, AMC, runs or AMC pulls, it's all about correlation. Okay, now that is short term. All right. And I'm going to give a time frame of anywhere between now and the next 3 to 4 months. I would assume that Adam Aron doesn't want APE to go naturally down to, let's say, $2. If it does, they want to try to be able to get the most value that they can or when they do an offering. Also, he had stated, listen, Q3 might be a little bit slower for a couple of reasons. One, you have the summertime, okay, and people are on vacations, they're doing other things. Two, there's not a massive abundance of really on or in demand hit movies set to be coming out. So there is that as well. Okay. So in the longer term, what could it do for AMC? Well, their main goal is to be able to get the shorts off their back. Okay. And in order to do that, you have to change the entire outlook and perception of the company. A company that is trading, okay, that has, no debt. A company that is trading cash flow positive. A company that has multiple streams of revenue, okay, and they're trying to diversify by selling popcorn in the stores, okay, picking up or acquiring other companies, such as the gold mining and so forth. There's a little bit of diversification. All right. And cash flow positive demand, not in debt, positive EBITDA and a brighter future is going to make shorts think themselves, listen, I don't want to pile onto this company. All right. So when you think about the longer term, can this help? Absolutely. Now, that's completely aside from the market that we are in. And I think a lot of people don't understand the market that we are in right now. Speculative stocks, anything that, is traded on future valuation, growth, perception is not what people are investing in. You look at the stocks that were trading crazy last year, like Upstart, Palantir, and even like Microvision, the future of self-driving. Microvision went from like under $1 to over, $20, $30. We're not in that market right now. Will we get to that market? Absolutely, because the market runs in cycles. So eventually when we see a little bit of stabilization, a little bit of growth, the economy turns around, then you get that little bit of a euphoric feeling. And when, stocks return to crazy valuations, if AMC has a better, solid foundation, the ability for this stock to go much higher is vastly in our favor. However, the time frame is just a little bit longer. So keep that in mind. Like I said, I mentioned in a few videos, previous videos, talking a little bit how events have an effect on stocks. Well, now you just think about how, the dilution of APE, okay, and them selling shares to the open market could affect the short term as well. So that's it for this video, guys. I'll see you in the next one.